Let's now move on and get a conversation going with Mr. Pramod Patwari, CFO at Balrampur Chini Mills. The company came out with its numbers just a while back. And in terms of the top line growth, it's been slightly flattish. Just about 2% growth is what the company has managed. The EBITDA margin is fairly steady at around 11.7 odd percent. Mr. Patwari, good to have you on. Let's start with the the sugar segment first and talk about the top line growth. I think you're absolutely flat compared to last year at around 1,130 odd crores. Can you just tell us how much you did in terms of volume, what is happening with pricing, and also an outlook on both volume and pricing, considering that we're very close to a brand new sugar year starting?
Good morning and thanks for having me on the show. So sugar revenue is a function of quota release, which the government of India does on a month-to-month basis. So our revenue from the sugar segment derived primarily on account of that. As far as the current realizations are concerned, we are selling sugar at around 38.5, and for the quarter gone by, the average realization came at 38.90. For the new sugar season, which is going to begin on 1st of October, our in-house view is that country will begin with an opening inventory of around 8.5 million tons. We are expecting that this year government will allow production of ethanol through juice and B-heavy route in an unhindered manner. And our view is that diversion of sugar into this can be in the region of around 4 to 4.5 million tons. If that we take that into consideration, the net sugar production as per our view for the upcoming sugar season should be around 30 to 28 million tons. So if you add 28 million tons with an opening of around 8.5, that leaves us with an available inventory of around 36.5. Against that, the domestic consumption next year should be around 29 million tons. So we are still left with 7.5 million tons of inventory, which is decent enough. And the normative inventory which the government has considered in the past and were extremely comfortable was in the region of around 5.5 million tons. So still there is a scope of 2 million tons of surplus inventory, and government might consider export at some point in time.
That's exactly the point that I was coming to, sir. I think the industry has been really crying out for some easing up on the export front. Now, we don't know. I mean, are you expecting that policy to change anytime soon? And if it doesn't, let's work with what we have right now. If exports are not opened up in any more meaningful way, and if we continue to have this kind of buffer stock and the surpluses, then what should be the expectation on pricing? Because on the cane side, obviously, we're seeing, FRP going up, and there's been the MSP hikes as well. So on pricing, what should the expectation be if we assume that there's no change on the export front for now?
So maybe at the cost of repetition, I would like to say that sugar price in the country will also depend upon the availability of sugar into the country. As we have painted a picture of around 2 million tons of surplus sugar, even after considering a diversion of around 4 to 4.5 million tons of sugar into ethanol. I think government would like to see the progress of the monsoon and the yield of the crops, maybe sometime post the commencement of the crushing season, and then they would take a call on the export front. As far as the future pricing are concerned, domestic availability of sugar is sufficient and it is balanced. So we don't see a very runaway in the domestic prices from here.
All right. Pramod, hi. Good morning. Prashant here. On the ethanol front, just this weekend, we had Mr. Amit Shah, the Home Minister, essentially talking about bringing forward the 20% petrol ethanol blending to FY26 as compared to 2030, urging sugar cooperatives to sort of increase production, etc. So what is, I mean, are you expecting anything on that front in terms of pricing, etc.? Is all that is settled?
So good morning, Prashant. This 20% blending target is nothing but a reiteration. Reiteration was already pre-formed in 2021. So government is looking at a blending of around 20% in 25-26. Sugar industry can easily supply 50 to 55% of the total requirement, which will be required for 20% blending. And as per the Niti Aayog document, for 20% blending, the requirement is around 1,000 crores liter. For the pricing, yes, we are still awaiting the revision of ethanol prices for the last year. But this year, as the government is looking for a meaningful diversion of sugar to happen into ethanol, I think the proper pricing will be set at some point in time.
No, it should happen now, right? I mean, anytime now, or
Yeah. So the ethanol year begins from 1st of November. So still there is a time.
Okay. And what would you expect the pricing to be at?
So if we take a relation of last announced price of ethanol vis-a-vis the FRP prevalent at that point in time, we get a conversion ratio. So we would be comfortable if government restores the same conversion ratio going forward also.
Okay, all right. Pramod, thanks a lot for joining in. We would like to understand more about your PLA project, but that discussion for another time. Thanks a lot for joining in and filling us in with all of those details.